Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So, as many of you know, I have been providing technical stock research and consulting to institutional money managers for about 32 years now. And just in the last few years, I started providing it to individual investors. And what I'd like to do is talk a little bit more about ADX this week, but I want to go into detail on the DI lines. So let's go ahead and get into this agenda. I want to distinguish between the buyers and the sellers and show you how you can use this in a trending situation or a reversal pattern, really, and take advantage of what these individual lines are telling you. So I want to look at each one individually, and then I want to actually look at the trends of each one. So we're going to go through that, and then I'm going to go through the individual requests that came through. So let's go ahead and get into this lesson now. I've got a weekly chart of Alphabet up, and what I want to do, so I've got the 18 and 40 overlaid on the price pattern on the price chart. Underneath, I took out the MACD because I want to focus in on the ADX line. And in fact, what I'm going to do, I left this open on the side because I want to show you, first of all, I want to show you that I'm using a 13 DI. For the DI lines, I'm using a 13 setting. And for the smoothing, or which really is the ADX, that blue line, I'm using an 8. And the reason why I like to do that, if you use the 14-14, I mean, it's really not, there's not a significant difference. But what I have noticed is you'll get more peaks and valleys in the ADX lines using the 8. And I like to compare each peak and each decline, every valley, and be able to do that and get a feel for whether there's improving momentum or deteriorating momentum. So that's why I have it set up that way. Now, what I want to do is take off the ADX line for a second. I'm going to move this out because I want us to think in terms of buyers and sellers, okay? The buyers are the green and the green DI or the plus DI. And I want to think about it in terms of if I'm moving up, we know that the buyers are in command, but we also want to think about whether they're improving, their strength is improving, or whether it's deteriorating. And there can be times where you get a really early warning sign that there's a change in the way that the buyers feel. And think about it from a common sense standpoint. If buyers remain strong, they still believe. So if this green DI remains strong throughout an uptrend, they still believe this is a good area to be a buyer. If it moves up enough to a point where they're thinking it's just too far away, the value is not, it's not worth it anymore, then the green DI will drop off, just as like what's happened here. Do you see how in this last peak when it reached 150, how the buyers really weakened dramatically for the first time in the move? So we were making higher highs and higher lows pretty consistently, holding the 18 and the 40. They had a beautiful trend to them. And then we made this peak here and the buyers just completely dried up, okay? Now, I mean, I think that's important. I think you want to recognize that. But what I'll say is that doesn't necessarily mean you're going to get a reversal in the pattern. What it would tell me is that I would be a little bit more reluctant. If I'm a trader, I'd probably be wanting to tighten up my stops and move aside if any kind of adverse price action takes place. But more importantly, I want to recognize that, it's probably not going to keep pushing to the upside. It doesn't mean it's going to go down, though, because for it to go down, we actually need to watch the bottom DI, the red DI, or the sellers, the strength of the sellers. And what we want to do is actually evaluate what the sellers are doing, because if we're moving to the upside, what is going to get the stock to reverse to the downside? It's going to be the seller's going to have to step up and say, I want out. Okay, this is how you want to be thinking. Think about these things in common sense terms, and you will do way better when you're using technical analysis. So if you notice what this did is red DI peaked here, it dropped down. You can see how the sellers were very weak and stayed very low. We're making lower highs and lower lows, lower highs and lower lows into July, and then look at what happened as we ran up into the top. We we didn't make a new low for the first time in the sellers. We have more selling strength showing up. All right, it's sometimes it's hard to even explain, but when you look at this red, it's telling you the strength of the seller. So if this red line is going up, that means the sellers are getting stronger. So look at what happens here. Red makes a big pop to the upside while the green DI, the buyers are actually weakening. This is the first real sign here as this is peaking. It's like an early warning flare off the bow that you have a problem developing based on the buyers, but not only the buyers, but also the sellers, which I've said I think is the first opportunity where you could actually get some kind of a reversal. Now, once we reverse the trend, you do have higher highs and higher lows taking place on the upper end. But let's go, and I'm actually going to do one thing. I'm going to get rid of the sellers because I want to really focus in on just the buyers. So now look at how we're declining and we're making lower highs and lower lows in price. And look at how weak the buyers are. And then we eventually start to see improvement in the buyers here where we don't make new lows with price. We make kind of a double bottom here. When this makes a new low, the DI, the green DI, or the buyers start to make, start to step up a little bit. And then we start to see another higher bottom and then a higher high. And we're seeing a lot more strength here after being very low. Anytime the lower DI is below 15, you know you have a very, very weak situation. Crossing above the 15 level after being low for an extended period is pretty important in and of itself. So I'm looking at this saying, wow, the buyers are really improving here. Does that mean we're going to reverse and go crazy to the upside? No, it doesn't. But it's the first sign that we've seen of improvement of this pattern using the green DI. So when you're looking at it as it's dropping, you should feel pretty comfortable in the idea that this is a pretty bearish trend up until this point in early 2023. That's a long time to feel comfortable as the stock is dropping. And it also should prevent you from being an early buyer. You don't have to jump in really early in this situation because we know that we don't have any sign of the buyers. Remember, we want to follow the footprints of money, and the footprints of money are going to show up in this bottom DI. The green DI is going to kick in, and it should kick in well before you should have an interest in jumping in. Get a little bit of proof before you decide you want to start being a buyer. All right, hopefully this helps you in looking at how to understand how to look at the buyers and the sellers separately. Let's go ahead and get into the individual stocks now. Just briefly, my services can be found at rabilstockresearch.com. Now, if you take the individual package, which has about 2 to 3 reports each week, plus a special video for that package to help you identify individual ideas, the trading course, the momentum course and trend course that I just put out recently, you have access to that automatically. All right, let's go ahead and get back into the individual stock requests that came through. Okay, so as I move into the symbols, I've changed the layout this week. I kind of want to get some feedback. I know in the past I usually have the symbols over on the right, but I'm making more room because I've got 5 charts up instead of 4. If this looks okay to everybody, I guess you can just tell me if you don't like it. But what I've done is I've got the monthly, the weekly, the daily, and then the hourly. And then I still have my chart over here with the relative strength and the RSI with the zigzag. So I just added an extra chart to have the hourly in the middle. And the reason why I want to do that is so there are times in the past where I've wanted to reference the hourly, but I wasn't going to do it because I'd have to bring up an extra chart or change one of these. And I didn't want to take the time to do that. So if this looks okay to everybody, I might just keep using this format. I can always go back to the 4 that I had before, but I get more and more questions on swing trading, which would be the daily and the hourly for me. And so I wanted to make sure I gave this a shot at least. So I'm going to start with the QQQ. And what I want to point out is there's There's some positives and some negatives, but I think this is kind of interesting when you look at this. Look at the hourly as a zero line reversal, potentially a zero line reversal. The daily is potentially a zero line reversal. The monthly is potentially a zero line reversal. And all three of these are bullish potential reversals, right, at the zero line. And then the weekly is the opposite. It's a potential zero line reversal, but it's coming from the downside. So it would be more of a potential bearish one. So I like to just kind of look for these patterns and see where they're developing, and if if there's anything overlapping in terms of two time frames. But really what we've got is pullback here to the moving average, and it kind of is taking the form of a pinch play, but we don't have a lot of strength in the buyers yet on this time frame. But if I'm looking at this as a move to the upside and a pullback, and this is basically not above the zero line yet, confirmed at least, and we don't have a lot of strength in the buyers on this time frame, I'm going to go and wait for this to click in and at least give me, maybe look for another pinch on this time frame. Do you see what I mean? Like this still has a declining 18. So this is why I use two time frames and sometimes three time frames. So if I'm looking at this as a failure at the 18-month line, this still has a rising 18 weeks. So you see how this has a declining 18-month and this has a rising 18-week and this has a declining 18-day. So we don't have confluence amongst two time frames. We can't really say that we've triggered to the downside on this trade, a longer term trade if this is really rolling over. And if this is an intermediate term trade with the weekly and the daily, we haven't triggered this to the upside because this line is still declining. We're still fighting a declining 18. That is confirmed by the MACD, needing a little bit more to cup around. Like to see green DI maybe strengthen a little bit. Certainly needs to strengthen here if it's going up. And red DI needs to kind of kick in if this is going down. So I like to look at it in these terms. And look at the confirmation. If I'm looking for a long trade, do I get confirmation on the daily chart? And if I'm looking for a short trade, do I have confirmation on the weekly time frame? Because that would be the lower of the two. So we've got these counteracting things. Now, there are a couple things just doing some analysis. This is a lot of improvement on a relative basis. You see how this has broken the downtrend line, and that is confirmed. That is confirming the price action breaking its downtrend line. But we're still dealing with a declining 18-month line, so it's going to be very hard for this to make any significant moves to the upside at this point. But until we see new strength in the sellers, right now the buyers are in command, and we don't really have any strength in the sellers right now, it's hard to expect any kind of a massive drop to the downside either. Okay, let's get into Caterpillar because I have a question that I want to answer. Is this a trigger developing on the daily chart? And one of the things I want to do is cover, I have two different questions. One was, is this a trigger setup? And we are breaking the downtrend line. And we made a move to the upside. We moved up 1, 2, 3, 4 days in a row, got back above both moving averages. I don't really like to take that signal, especially when there's overrun in the MACD. You see how this overran to the downside? So I'm more inclined to want to play the first pullback and higher low. However, I'm not going to play a higher low in this instance. I'm probably waiting for a break to the upside. Now, why would that be? Because we have overrun here. You see how this overran on the MACD is below its signal line. So when I see that, I'm thinking that what's going to happen is I take the 50% retracement and I expect this to kind of have a hesitation in here and maybe check back again before it's ready to go back up. So it kind of pauses, and a lot of times it'll make a second test and maybe even a second test of the lows before it's ready to turn back up. So I am using a more conservative trigger in this pattern. I'm not looking to be aggressive here, even though we're kind of forming a pinch play here. And we're still holding an 18-week. We still got good momentum. When I see this overrun, I'm usually expecting something like this to take place, and I'm waiting for more confirmation on the trigger time frame. The other thing you can do is if you've got this pullback on the hourly, if you notice right now red is on top, we've got this lower high, lower low. Let's wait for a 1, 2, 3 in this time frame, and I want to see green DI kind of take over again. I'd like to see the MACD look for improvement on this time frame, and you're not going to get you're not really going to get a false signal getting in too early doing that. But I can just tell you, just looking at this pattern, I think we need to take out this prior high to really get what I would consider to be a true signal. And that's based on what's happening on the higher time frame. Okay, so let's look at WST. So I had this as a another stock that is really showing a lot of strength. I mean, this request, right? This has got beautiful strength in the ADX. Look at that's rising at 35. We've had a big uninterrupted move to the upside. We had this nice breakout pattern out of a low ADX condition, and we're moving up and moving up. We had a big gap up. Lots of strength. I'm just looking at these two time frames. I'm really pretty attracted to this, and I'm thinking, God, I ought to just be looking for a pullback. Now, one of the things I do is I typically look for two pullbacks. This really didn't qualify. I mean, you could probably look for another pullback on the daily chart, but even though we've got all this bullish action here and here, I don't like this. You see how we've now rallied up to the 18 months. So if I'm not looking at the higher time frame, if I've got this not up and I'm only looking at these two, I'd have a much more bullish feeling about this and thinking, man, this could get up to 350, which it still might. It might do that. But when I know I'm finding a declining line on the higher time frame, it's going to make me hesitate to want to play this anymore. But you're breaking the downtrend line, and the pullback off the 18-month line could cause the 2. We don't have a 2 yet in this reversal pattern. It could cause a pinch on the weekly chart. So these are the kind of things I'm looking for in this kind of pattern that's showing a lot of strength. But similar to what I was talking about on the prior the CAT on smaller time frames, because this is hitting this line, I pretty much want to see a 2 and then a back up through 3 to confirm that we're really going to get through this. I'm not going to guess that. I need a pullback off this because it's made a run anyway. Okay. All right. Let's look at Google. So I mentioned in the relatives in the DI lines that this is showing improvement, correct? I mean, we've got some break of the downtrend line taking place. We've got some improvement in green DI. We've got a little pinch forming here. The question was asked, does this look like it's getting ready for another move back up to this level? Now, it could be. I mean, it very well could be. We're not really seeing the relative strength improvement that I like to see. We haven't broken the downtrend line on a relative basis. We're still below the moving average. So I know that it's not really turning into a leader or anything like that at this point. But what really bothers me about this trade and leads me to think that 100 might be just where it's going, look at how harsh this decline was. You see how harsh this pullback was from this peak to here? So I'm sort of looking at the midpoint of that, and then I'm looking at the big round number. I'm looking at this prior high. I'm thinking we're probably only going to 100. I mean, it might be a trade to get to 100, but it's pretty sloppy. It's not really all that appealing to me. If this pattern looked better, I really like this. This is a 40 to 18 bounce pattern. You see how this is the first time we rallied all the way to the 40 in this decline, and now the 18 is starting to cup around, and we do have this pinch developing. Looks like the sellers are slowing down. I mean, yeah, it's very possible we could make that move to the upside. I just wish this had a better look to it. It's not that attractive to me, so I would probably pass on that. In terms of PM, yes, overall this pattern looks okay, but I'm looking for A+ patterns, and what's missing here is we don't have any ADX strength on this time frame. We don't have any ADX on this time frame. We don't have any ADX strength on this time frame. So I need a breakout pattern. I need confirmation, and I don't want to skip a time frame. So I probably want to see strength on this time frame and then look to buy a pullback. As opposed to jumping the gun and saying, you know what, this looks like it could trigger as an opposing trend pattern here with a rising 18 on the weekly. But again, we have overrun here. We don't have any strength here. So you got to be really careful, or you can get chopped up in a pattern that just doesn't have any strength. When you have low ADX in multiple time frames, draw trend lines on price and look for a breakout. All right, it's the best advice I can give. I learned that from Linda Raschke, and I really believe that is a safer way to play this type of pattern. Okay, got a couple requests on some semiconductors again, and there's no doubt there's improvement here. Notice the MACD on the weekly. So we made a move to the upside, pull back, made another higher high. That's after breaking the downtrend line. So we've got some proof on a price basis on the weekly. There's improvement, and then we get a pretty orderly pullback. And notice how both lines are above, and we have a pinch developing. So we've got, so this is a real improvement in green DI, I think. You've made a higher high in green DI, and we're about to cross the ADX line, is about to cross 25. These are all really good signs if I'm looking at a weekly and a daily. Now, we've got a zero line reversal with low ADX. What we don't have is a really good trend line that could be drawn. So what I like to do in this instance is, again, go down to one more time frame. And since I've got the chart up, I can show you. I'd probably look at this as a low ADX pattern and look for a breakout here. Now, it might seem a little aggressive in this instance, but we have 1, 2, 3 weeks down and then 2 quiet weeks sideways, and we're starting to turn back to the upside. So I don't know. I mean, I got to tell you, we do have a problem with the 18-month here, but based on the smaller time frames, I probably would be willing to take a shot at this. And just, use good trade management, good risk management. In this environment, I'm kind of recommending, when I talk to my subscribers about this, I like to say, look, if you risk one unit, let's say you risk 10 points, at 10 points of profit, take some profits and go to a break even. I mean, we're not in an environment where you can sit here and be a hero and look for a huge win. But if you can add little marginal wins to the bottom line and put on a little quarter of a position profit here and go to a break even, and it keeps going, you're participating in a market environment that's still kind of questionable. That's how you do it from a bottom-up standpoint. But you have to understand that the portfolio management and the money management and the trade management has to be adjusted a little bit in this environment. Okay, ACLS, big move to the upside. It's gotten extended for my liking. I don't really like this type of pattern because it's made such a big move away from the 18-month and the 18-week. So I'm looking for the first correction in this, especially now that we're starting to show a little bit of signs of lost momentum. Let's look at ON. I like this, the way this is developed. We broke out of this pattern here, broke out, pulled back. We had a pinch develop on the weekly chart. Now, what would I be thinking based on where it is right now and the fact that we kind of V'd out of this? Look for your second pinch. So if this crosses up and gives you a pinch and you get a pinch play buy, now you have a 2 time frame pinch play. And that's pretty much the best way to handle this trade right now. Green DI has improved enough that I feel pretty comfortable playing this breakout if in fact we get confirmation on the daily chart. Okay, look at ITW, another orderly pullback. Now, this one didn't actually break above these prior highs up here, but there's really good momentum condition in place. So I'm willing to take a hard look at this pullback, and we've got this zero line reversal developing. Overall, this is a pretty attractive pattern. It doesn't qualify as a second pinch because we weren't above when this was pulling back. So I don't know. I mean, based on the way this is playing out, you might look for a little bit more confirmation here, maybe a break above these prior highs. We've got a peak here, and we've got a peak at these levels. You can always zoom in and see that 240, low 240 area, getting back up through that, I think would be pretty good confirming evidence, especially based on where the market is situated right now, just to get a little bit more confirmation in what we're seeing. Now, you can do that, and then you could decide whether you want to manage that trade off the weekly chart or off the daily chart. Let's take a look at Netflix. I had a number of questions about this as a potential short, but I didn't bring it up as a short play because look, we've got this rising 18-week and it's above a rising 40. So when that's the case, I know this is rallying into pretty big resistance, but when we have rallied up enough to cause these lines to both be rising, and we have overrun here, then you know that you're looking for a full-fledged switch of the trend. You can't look at this as an opposing trend pattern because this trend is up now. It's not just it's not a counter trend rally. It's actually up to the upside. So we need more confirmation here. I need to see the weekly chart maybe come down and fail and then turn back down, and then I could look to the daily chart for entry. AXSM. I do like what's developing on this bigger picture pattern. It's trying to develop, but we have overrun on the MACD here. So when I see that, again, I'm not going to jump the gun on any kind of an up move here. I'm looking for a change in trend in this time frame. I need to see strength here, higher low, move like that before I'm interested in playing this. Now, I would keep this on a watch list because of what's developing on these bigger time frames, but you just got to be careful about jumping the gun on that type of pattern. Fortinet is actually a pretty attractive pattern. I like what's going on here. I just would love to see this pull back or pause a little bit more on the weekly. It's gotten a little overbought. If we can pause a little bit more, I think this is a pretty attractive one to keep an eye on. Thanks for watching the show today. If you have any stock requests, send them to stocktalk@stockcharts.com. Also, if you want to reach out, my contact information is listed. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.